Hey everyone, welcome back to the channel. In this episode, we are going to take a look at the past week's performance of the stock market. We are also going to take a look at the top two losers from the last week. Those had one of the biggest declines in the stock market history. And lastly, we are going to take a look at the future for the next 5 days. What are the different catalysts that can move the market up or down? So if you get any value out of today's video, don't forget to hit that like. And without further ado, let's dive in. So in the last 5 days, the S&P 500, NASDAQ, and Dow Jones had relatively good performance because all the three indexes were up in the last 5 days. S&P 500 was up 1.89%, NASDAQ was up 0.97%, and Dow Jones was up 1.32%. So individually, S&P started at 4,447 points and they ended the week at 4,500 points. NASDAQ started the week at 13,958 points and they ended the week at 14,094 points. Dow Jones started the week at 34,690 points and they ended the week at 35,089. If we look at the chart, for most of the week they were in line, but then we started seeing a big decline in NASDAQ because tech saw a huge sell-off. The top two losers from the last week were Facebook, Meta Platforms of course. It saw a drop of over 21%. And secondly, it was PayPal, which saw a decline of over 23%. From a Facebook standpoint, they started the week at $300 and they ended the week at $237. So right after the earnings call, the moment they got to their future guidance, the stock plummeted. And I have done a full bullish versus bearish case on Facebook. So if you have not seen it, check it out right over here. PayPal was trading around the 164 and it even went up to 175 last week. But then similar to Facebook, right after their earnings were announced, the stock plummeted to $130 and now it's like ranging around $126. So why did PayPal stock crash? Well, it's the same as Facebook. Their future guidance is very soft. So looking at their company expects the Q1 adjusted EPS of 87 cents, whereas the consensus was $1.16. PayPal also expects the Q1 revenue to only increase by about 6%, with the revenue excluding the eBay, which rose to about 14%. PayPal expects to add about 15 to 20 million net new active accounts this year and a total payment volume growth of 19 to 22% at the current rate, but that is less than the 23% TPF growth it had in 2021. So whenever companies have a softer guidance on the future, this is what exactly happens because most of these companies are growth companies. Their valuation, their stock price is always forward looking. So if the forward future is not as strong as their historical performance, you would see the stock price plummet, at least in the short term. In my personal opinion, both PayPal and Facebook are very big companies and very difficult to fail in the long term. But in short term, you would see a lot more volatility in the stock price. So as long as you're a long-term investor and you're not over leveraged in any of these stocks, you would do well in your portfolio. Next, what to watch out for the next week? Well, there are three main catalysts that we need to watch out. Number one is the consumer price inflation, which is a CPI data which comes out next week. The economists are expecting that there would be a 7.3% raise in the CPI, which would of course be the highest interest rate since 1981. Now, CPI has the power to rattle the markets and we could see very heavy volatility. This would not only force the Federal Reserve to look into the rate hike sooner than expected, which is March, we could see some heavy sell-offs from investors because they will be spooked, especially after some of these weak future guidance from a lot of these ultra mega cap companies. So in one of my previous videos, we talked about how big these companies are like Microsoft and Apple, that they have the power to pull the market up. But similarly in the FANG group, you have other companies like Facebook, Netflix, Amazon, Google, Microsoft. They also have the power to bring down the market if the future guidance is soft. And we saw that from Facebook and PayPal, of course. The second catalyst that we are going to be looking at are the earnings. Well, most of the big mega cap earnings are over and we now have some kind of a guidance on how 2022 will look for them. But then there are some other big companies like Pfizer, Coca-Cola, Disney, Pepsi, Peloton, Uber, Afrm. These are some of the big earnings that are coming out. So for this week, I will be doing a live stream for the Peloton earnings and the Afrm earning on Tuesday and Thursday respectively. We will also do a recap of the Coca-Cola, Pepsi and Uber earnings in this week as well. The third catalyst, of course, is Ford is going to be discussing with Bank of America their financial outlook on the company, and Uber is going to be conducting their investor day since the IPO, and it will give some guidance on Uber's future moving forward. So those are some of the three main catalysts that I can sum up for next week. So among them, I'm most looking forward to the Peloton's earnings. The reason why is because Peloton has topped its sales estimates 7 out of 8 quarters and EPS in 4 out of the 8 quarters they have reported earnings. Now we all know that the executives who will be reporting the earnings will be in the hot seat and they are going to face some tough questions from the analyst. One of those questions will be, why did you halt the production of the Peloton bike and treadmills? But at the same time, analysts are also thinking that because of this whole fiasco, the stock has overcorrected itself. The underlying business of Peloton remains strong and it is expected to recover in the future. Peloton stock has been trading below its pre-pandemic level, even though that they have added more subscribers and are improving and outpacing as compared to the prior levels. And I'm sure some of these analysts will also ask that question, the elephant in the room, is Peloton looking for a merger and acquisition? Of course, some of these big names that have popped up are like Nike, Apple, Amazon. Would they be looking to acquire Peloton? We don't know, but I'm pretty sure that some of these analysts may ask that question on the call, and that's why I'm really excited to the earnings call. There are other speculations that Peloton may be tying up with Garmin. These are all speculations, and I'm sure earnings call will give us some insights on the future guidance of Peloton. Now, the second company is Afrm that reports its earning on the Thursday, and I'm also looking forward to them because their biggest business is Peloton. So if Peloton's future guidance is weak, I can see Afrm stock price also taking a hit in the next week. So there you go. That was a quick update on the last week's performance, what's coming up. If you liked today's video, don't forget to hit the like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.